welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and I'm joined today by Jose Garcia Zarate, Senior Fund Analyst for Morningstar. Hello, Jose.
Hello.
So passive strategies are your specialism, and we're going to talk about ETFs today because they have had a very good year, haven't they?
Indeed, they have. We so far into the year, up to the end of August, we've got record inflows into ETFs, just above 50 billion in net new money going into these products, which is a record high, actually.
And that's against a pretty dodgy backdrop, isn't it? You'd expect when you see these sort of inflows, then that's been because people are feeling very positive because the market is rising, but it hasn't really been the case, especially in the last month. The last month has been very volatile. So how are ETF investors able to get over the mental block that so many other investors have, and where are they putting their money?
Well, this has actually been a rather curious month, actually, because I was going to, I expected August to be really bad in terms of net new money going into any kind of investment vehicle, given the turbulence in China. But actually, it's been a pretty good month for ETFs, and in particular for equity ETFs. And what we see is that European investors are perhaps taking the long-term view, and they're saying, okay, there may be some trouble in China and some troubles, in the emerging markets, but the fundamentals for the European economy and the US economy in the medium to long term look pretty okay. So whether it's, the timing actually of the investment is the right one is another issue. But it is interesting to know that they're putting the money into sort of like the European large caps and the US large caps on the expectations that medium to long term they're going to perform well.
And that's really good because, as you say, it's not about timing the market, it's about taking a long-term view. And normally when we see times of volatility, investors actually do, one of three things. They pull their money out altogether and hoard it in cash because they get scared off by that volatility, or they go for some of the more perceived safe havens of things like gold or bonds. But to take that long-term view on equities, especially if you are a long-term investor saving perhaps for your pension, this is a really savvy choice.
It is indeed, and that's why I was pleasantly surprised with the August results.
And let's have a chat then about strategic beta, smart beta as it's also known in the industry. We have been hearing lots about this for the last couple of years, but it's taken a while for real investors to catch up with the rhetoric. How are things looking year to date for strategic beta?
Well, we continue to see inflows into these products, not to the same level as in the US, perhaps, but they're growing also in the European markets space. Around 10 to 15% of net new money into ETFs are going into these particular products, and we see a variety of exposures. And one that is proving particularly popular this year is Japanese, in particular the Nikkei 400, this index that kind of like selects companies on the basis of good governance, and that's proving a very popular investment choice.
That's been called the shame index, hasn't it? Because if you're not in it, you're shamed into going into it. And that sort of prioritising of shareholders is it's part of Abenomics, really, isn't it? About getting Japanese corporates to prioritise returning cash to shareholders.
But it also goes to show that investors are also quite confident that, these Abenomic policy settings are going to be good for the long-term health of the Japanese economy, because these are not tactical investments. These are investments for the medium to long term.
Let's hope they're right.
All right.
Jose, thank you very much.
You're welcome.
This is Emma Wall from Morningstar. Thank you for watching.